What are investors so scared of?
Well, that's the real question. Why is Citigroup stock such a laggard? Why have they underperformed so much? And actually, at this point, the stock under this new CEO, not so new anymore, Jane Fraser, has actually underperformed. I think the biggest fear relates to the new capital rules known as the Basel III Endgame, and that Citigroup will be hurt a lot more than almost any other bank given their expansive global structure. And so the stock at $40 a share, other than that, it's tough to explain. So we came out with a new report. We had our Baker's Dozen checklist, 13 items that we checked, and they all seem pretty good. So if I can't explain it, why it went down, to me, that means it's an opportunity at least to go somewhere back toward 47 where it had been from $40 right now.
So, Mike, and maybe I'm quibbling here. Is this call more that Citigroup is oversold, or are there catalysts that you see, real fundamental things to get excited about here?
Well, I think there is some excitement here, even while the stock's on the low. I would say first, as it relates to credit quality, Citi is the poster child for the banking industry's problems over the last 50 years. Okay, there has been one issue that they missed, but frankly, they missed the whole regional bank crisis. They missed the issues related to UBS. And when you look at their credit, they're one of the few banks that did not have a rating agency downgrade. Citi's bonds are the #1 best performing bank bonds this year in the U.S. When you look at commercial real estate, which has everybody in a frenzy, Citi has about the lowest exposure to commercial real estate. And if you say overseas, that's always a risk. You look at the European banks, Citi was trading with the European banks for now they've even decoupled. So if you're looking for a big hole in the balance sheet, like they had in 2008 when I came on Bloomberg and said, look out for their $50 billion of CDOs, and the stock was over $500 a share then, we put a sell on it. I don't see the big hole, so I think credit is fine. When it comes to costs, they have worst-in-class efficiency, absolutely, and we lowered our numbers even for the second quarter, and they present publicly next week, and maybe they increase expenses, but I don't expect any change to their expense guidance for this year, and I expect them to stick to their guidance that on an absolute basis, expenses decline after the third quarter of next year. So it really comes down to capital, and then these new Basel III regulatory rules, boy, it's just that's wow. I mean, over 50 years, you can say they deserve it. If you look at their track record over 10 years, you go, wow, Citi and the banks, the loan losses are half the level where they used to be. But that delays the buybacks from what we thought to out like an extra 2 to 4 quarters. So Citi still has extra capital. We're not looking for any share issuances. They're not going to cut the dividend from our forecast or anything like that. It's just instead of buying back 10% of their stock over the next year, maybe they buy back 5% of their stock. But next year we start having them buy back over 10 to 15% of their stock over the next 2 years. You buy back stock at half a tangible book value. That's immensely accretive. There's no better use for your capital. So Citi should be selling their desk chairs to raise funds to buy back their stock.
How much of a driver is that for investors looking to get in on Citi, this buyback story?
That is the #1 driver. So if you say Citi can go ahead and buy back a lot more stock, and they bought back $1 billion in the second quarter, but that's not as much. If you can buy back in your double digits, then you're going to see the stock go from 40 up very quickly. You just blink and it'll be higher. But that depends on the interpretation of these new capital rules.
Right.
The comment period goes through November 30th. It has everybody in a funk because it's so complex. It's hard for anyone to really understand.
So it's buyback first, and of course, concern about the new capital rules, and then whatever Jane Fraser, the CEO, is doing with regards to divesting some of its overseas operations and streamlining things, changing the culture, that's kind of at the tail end of what investors are thinking about?
Yeah, I think investors are just trying to get through like the next several quarters. So with buybacks and costs, and do capital markets turn? But what you're really playing for, you can play for a double or potentially a triple over 5 years if they get to a 12% return on tangible equity versus 8% consensus forecast versus implied in the stock price 4%. If you can get to that higher returns post divestitures, they're divesting consumer operations in 14 countries.
Yeah.
Once you get past that, you're going to have a much more cleaner, simpler, easier to understand Citigroup. So finally unraveling some of the deals that go back 25 years to the days of Sandy Weil, which I covered then, and the stock traded at 3 times tangible book, not 50% of tangible book where it is today.